For TraderInsight.com, I'm Adrian Manz, and it's time for a strategy session. This time, let's take a look at one of the trades from the Around the Horn trading plan or daily income trader plan, and this is from the core portion of the plan. Now, one of you called me today, and after you finished apologizing to me for calling me, which I will ask again that everybody please not do, I mean it when I say it. If you don't understand something and you feel like it could clear it up by giving me a phone call, just give me a call and don't worry about it. You can always get a hold of me. Just text me first. Let me know that you'd like to talk, and I will usually give you a response saying, you know what, you can call me in 10 minutes, and let's just figure it out for you. But the question was pretty straightforward, pretty simple. All right, Excel group. How do you handle that trade? Because somehow the rules didn't make as much sense as you thought they did, and it's probably because it's the first time in a while that we've had a long trade that hesitated like this, so let's have a quick look. We had a 34 even entry. 34.16 was 50% of the distance to the profit target. 33.78 was the stop loss. If it hit the stop loss first, right, if you got the entry on this trade and then it hits the stop loss, 33.78, you're out. If it gets to 34.16 before hitting that 33.78 stop, you move the stop up to break even. So now the trade is risk-free. You're controlling your risk on the position. You have moved the stop from 33.78 to 34 even. Next hurdle is going to be 10 cents to the target. When it gets to $34.21 in this case, that's just a little bit of math you have to do in your head. Then you're going to move the stop from 34 up to 34.16. And when it hits the target, of course, you either take off a portion or the entire position. Let's take a look at what happened. Here you have it. First thing you should notice is I draw all the lines on the charts even though I automatically execute the trades. So I want to see when it's time to move my stops around. That's the purpose of having those lines, and I want to make sure that I'm not making a mistake like entering a trade in the wrong direction or something. So the lines really help figure out exactly what it is that needs to be done. So in this case, I'm going to get long at 34, and I get into that position right after the opening bell. So it opens within the allowable slippage that we have established for the trade, comes down, hits the entry price, goes a little bit below, and then makes this move over the course of the next 15 minutes up to 50% to the profit target. So what do I do when that happens? I grab my stop loss and I move it up and pop it right on top of the entry price. So now, if price were to come back down again, if it hits 34 even, I'm going to get out of this trade, right? I'm going to close out the trade. My hurdle for a possible re-entry is it's got to come all the way back down to $33.92. If it comes back down to this line after it stops out at this line, I'm going to take another entry when it moves back through 34, but that didn't happen today. What did happen was it got up, it hit 10 cents to the target, it reversed, and it got me out at 34.16. The point of all the rules is to control the risk. This first hurdle moves our trade to risk-free. The second hurdle moves our trade to protect a profit. So that's a profit-protecting stop at that point. And look what happened afterwards. It managed to keep us from running all the way back down to the entry price. So not a big money trade on this one by any stretch of the imagination, but a profit is a profit, and I'll take one wherever I can get it. If you have any additional questions, send me an email, adrian@traderinsight.com. I hope you had a great trading day today and an even better one tomorrow. The best trader education anywhere, only from TraderInsight.com.